Hello and welcome to Milton's Briefs, where I go over the financial news and the market over the day. And today's July 3rd, 2025. And a lot of very interesting things happened today. So let's get into it right away. So the U.S. labor market added 147,000 jobs in June, while the unemployment rate fell to 4.1%. So the latest jobs report that just came out for June was highly anticipated by investors, especially being the end of Q2, being past the halfway part of 2025, with the disruption in the supply chain with tariffs and the turmoil that's been going on ever since the Liberation Day announcement back in April. This was really highly anticipated. And the report showed resiliency in the labor market, as this article indicates. The U.S. economy added 147,000 non-farm payrolls in June, more than the 106,000 that was expected by economists. And the unemployment rate fell to 4.1%. In May, the U.S. economy added 144,000 jobs, while the unemployment rate held steady at 4.2%. So these figures were revised higher on Friday from the previous 139,000 in May. So as we've seen from May and June, much more jobs were added. According to RSM chief economist Joe Bruselas, he stated, "You're just not seeing any feed through from tariff or trade-related stress." So the economy is looking strong as of right now. It's looking steady. As you can see, the jobs report's pretty steady. Unemployment steady. But here's where it gets really interesting, because if you check this article right here, it says the government employment rose by 73,000 workers in June, accounting for roughly half of the month's gains. And anytime you have healthcare workers or government workers that increase in employment, their employment is not adding to the economy because their salaries come from taxpayers. So in reality, this report is not as optimistic as everybody should think it is. And I believe that investors are overreacting just so they can break records in the S&P 500. Well, let's continue. According to Oxford economist lead Nancy Vanden Houten, she stated the risk going forward is that the slower labor force growth keeps the unemployment rate low, even as the number of unemployed people rise, which this person I stated in this morning's video. And because of this report, there's increasing bets of a July interest rate cut not happening. Markets are now pricing in at only 5% chance of central banks lowering interest rates in the July meeting, down from 24%, because as before, anytime you cut interest rates, the cause of that is because of the economy slowing down. And as the data shows right now, the economy is not slowing down due to the inflation holding steady and the jobs report showing positive growth. And Jerome Powell, the head of the Fed, is very keen on always following the data and not making too many assumptions. So this is a very clear sign that the FOMC meeting in July is likely going to keep interest rates steady. So let's go into, or actually before I move on from this article, it's freezing up. So just go to this window here. As I stated earlier, the S&P 500 and the NASDAQ both hit records for the third time this week as optimism sweeps Wall Street. And again, I believe that this optimism is a facade of growing pains to come, because as you all know, July 4th is a American holiday, Independence Day, and the market's closed tomorrow, and it closes early today. It closed at 1 o'clock, and the bond market closed at 2 p.m. Eastern Standard Time. So I believe that these records were being chased. They were trying to ride this momentum as much as possible, even though there's not a lot of indicators in the long run that this will hold. And I'll explain that later on. So as you can see right here, the stocks posted fresh records on Thursday as investors digested a stronger than expected June jobs report. S&P 500 and NASDAQ hit record highs after moving up about 0.8% and 1% respectively. So yeah, we all know about the jobs report right here. And as you all know, President Trump despises the Fed chair, Jerome Powell. He stated right here that he may actually announce his successor early. The president said, quote, Powell should resign immediately, because obviously the president wants interest rates cut immediately, because the lower the interest rate, the cheaper it is to borrow money. And this is good for people with mortgages. This is good for people that are looking to get a loan. But this is especially good for the president, because his recent bill, the big, beautiful bill that he calls it, is going to raise deficits exponentially, as well as the debt ceiling. So that's going to be a lot cheaper to finance these deficits if interest rates are lower. If it's lower by 1% and 2%, the government would save tens of billions of dollars every year. So of course he wants to do that. But for the typical American, in the short run, it makes borrowing money easier, but it actually spikes inflation up. And I can get into all that later on, but let's continue with this article here. So investors are also on high alert for fresh developments on the trade front, as countries face to beat the July 9th deadline for sweeping tariffs. Trump's trade deal with Vietnam has boosted market sentiment and hopes for more agreements to fend off economic damage from tariffs. So this is something else that I believe the market is not really pricing in right now, the July 9th deadline for the sweeping tariffs. So for those of you who don't know, President Trump on quote-unquote Liberation Day back in April announced the sweeping tariffs that would take place. And what happened as a result of that, the stocks came crashing down. We had like one of the steepest drops in the stock market in U.S. history. Of course, not like dating back to decades, but in more recent history. And so what did President Trump do in response to that? He created this quote-unquote 90-day pause, in a sense delaying these tariffs, and the stocks spiked right back up because the stocks did not respond well to that. So this July 9th deadline is coming up, and I believe that if or when tariffs are implemented again, then the stocks are going to tank. So this is why I believe these record highs are just a facade. But let's continue here. The U.S. has lifted curbs on exports of chip-designed software to China, a sign of thawing in trade tensions between the top two economies. So that's a really big deal when we talk about AI, especially. And that definitely helps NVIDIA, because they get a lot of their products from China in their transactions. Okay, let's go to the next report here. This is going to be really interesting here. So, as you all know, the House passed the big, beautiful bill today, and that's what it's called. That's not what I'm calling it. But the final vote was 218 to 214, with just 2 Republicans voting no. Of course, all Democrats voting against it, and the rest of the Republicans voting for it. So this is a very narrow majority for this bill. But what I want to get into is this article about it right here, because there's been so many changes to it, so many amendment changes, and this bill's like almost 900 pages long, and the average American is not going to read it. And I think it's really important to at least get a sense of what is in this, mega bill, that, as this article states right here. So, how 2 business world changes to Trump's mega bill help push the price tag up $1 trillion higher, which is insane. Let's pause this video. So amendments in recent weeks to President Trump's big, beautiful bill that made the business tax credits permanent and removed plans for a revenge tax. So this is obviously big business really likes this bill. And that's why I think this is actually part of the reason why I believe stocks were rising a lot too, because this helps the ultra wealthy a lot. And it's a very big transfer of funding and all of that. So let's see why this bill is being raised to $1 trillion. So the top driver of these increased projected costs were amendments around the corporate tax credits. So things like depreciation, factory expensing, and more that were in the House version of a temporary basis. So what's pushing the price tag upward is a swath of business world provisions moving from a cost of about $519 billion in the House bill to over $1 trillion in the Senate product. Man, that's huge. It's also an area the president has appeared to take a special interest in. A senior White House official noted Thursday afternoon Trump was closely involved in the entire bill, but with a seeming special interest here, as, quote, he obviously has a very deep knowledge of the business tax code, having been in business a very long time. So, again, the changes in these bills likely affect either the president's business interests or his friend's interests, because it states right here he has very deep knowledge in the business tax code and changing it from around $500 billion to $1 trillion more. So that's pretty unbelievable. It's freezing up. So I'll just go to the next. Oh wait, here we go. So here's a nice little diagram of it. Wow, yeah. So almost in the -6 trillion. I'll have to study that a little bit more to understand that graph, but let's go to the next article here. So, as I said earlier, there's been record highs for a lot of stocks, but one stock that's really turned it around ever since the beginning of 2025 has been NVIDIA. I'm going to try to pause this video so it's not interrupting us here. So, NVIDIA stock closed at a record. AI chipmaker nears being crowned most valuable company in history. So they're looking to surpass Apple. So let's see right here. They closed at a record high on Thursday, rising 1.3%. A broader market rally putting shares one step closer to unseating Apple as the most valuable company in market history. Let's see. So during Thursday's shortening trading session ahead of July 4th, shares of the AI chipmaker rose more than 2% to give the company a market cap of $3.92 trillion. As of Thursday's close, the company's market cap settled at $3.89 trillion, just fractionally off the record of $3.91 trillion Apple clinched in late 2024. So what does this show you? This shows that the AI with Palantir having all these government contracts with the United States, with Israel, especially with the war that's going on. Don't believe that it's over, because it definitely isn't, because there's so much intelligence that goes on with foreign affairs. But why it's so important to keep your eye on this is because AI technology is not going away, but it's becoming more and more innovative just in the last several years. And the fact that sophisticated technology like ChatGPT that's available to you and I just off our computers and cell phones, and you think that those in the government have something much more sophisticated, it just goes to show you how much investment and advancement this software is going to have going forward. And that's why I believe it's very important to invest in this. But let's continue here. So the iPhone maker's value has dropped since then as it struggled to catch up to its big tech peers on AI. That's true. The stock of Apple has been significantly less than those of Meta and the other Mag 7 stocks. Ever since, the President Trump's threat to hit them with overseas tariffs. So that definitely hurt them in the beginning of the year. I think they'll definitely rebound, though. Apple's been very resilient with their products, and they show no signs of slowing down, in my view. So investors have piled into NVIDIA after its most recent quarterly earnings report in late May, showing the chipmaker continuing to thrive despite U.S. restrictions on Chinese use of chips. The stock has continued to notch fresh record highs ever since late June. And this is why, obviously, I was a big fan of buying the dip, as they call it, back in February and March when stocks were tanking because of President Trump's tariff policy. Because the thing is, these companies are resilient and they're going to overcome these temporary turmoils by the president. Because what he says in my opinion, isn't always going to be true. Because even with the July 9th trade deadline that he himself put into place, not congressional approval, not his Secretary of Treasury, but he actually put that into place. So he could easily wake up one morning on July 8th and say, hey, I'm going to change it to another 60-day pause, another 80-day pause. And he could just push off this deadline because he could just wake up one day and want to do that. So I think it's very important to not always rely heavily on what the president is saying for long-term investments. Actual policy is really important. And this is why I believe we're going to transition right into this article right here about how the U.S. dollar has fallen significantly this year because of of President Trump's policies, especially with Treasuries selling off. That's something that wasn't really talked about when the stocks were going down. Everyone was saying, oh, this stock's going down X, Y, and Z. But when treasuries were selling and the yields were skyrocketing, going over 5% for the first time in a long time, the U.S. dollar right here, as of July 2nd, 2025, has its value fallen at the fastest clip since 1973, when the U.S. took its currency off of gold, the gold standard. And I believe before I read this article, I saw it was like a 10% decline. Yeah, here it is. Over the past 6 months, the dollar has declined more than 10%. So imagine if the power of the dollar is declining more than 10% and inflation starts to go up incrementally with the tariffs kicking in, that's going to make the economy contract even more, in my view. And it's going to be a big wake-up call in the stock market right now, which is why I believe these record highs doesn't really mean too much, in my view. But let's continue here. So the President Trump wants the U.S. to increase its exports and lower its imports. Thanks to a historic decline in the value of the U.S. dollar, he may get his wish, but at a cost, he may not have anticipated. So today, the dollar sits at a 3-year low in its value. The simplest explanation for the decline is that global investors now expect the U.S. economy to no longer outperform the rest of the world as a result of Trump's tariffs and worsening fiscal issues. Excuse me. And this is the thing. Not only is Trump's tariff policies the major cause of the dollar losing value, at least in the immediate term, but when you're alienating your allies around the world, waging trade wars with them, they're going to want to put their money into something else, either into emerging markets or into gold, which a lot of global central banks have been doing, selling off the treasury and putting their money in a more stable investment because they see the president's leadership not being so good. So even with U.S. stocks returning to record highs, the return on other countries' equities has been even stronger. Meanwhile, the return on lending to the U.S. is expected to decline as growth here slows. And that's a really big deal because that basically shows that less people are going to put their money into U.S. treasuries. So let's see what this is here. So many, including members of Trump's own cabinet, assumed his tariff strategy would strengthen the value of the dollar compared to other foreign currencies. This thinking behind it was that as American consumers began to purchase fewer foreign goods, those other countries' currencies would weaken relative to the dollar. Instead, the opposite has occurred. U.S. growth prospects have weakened, in part because of Trump's tariffs, and the U.S. debt relatively is less attractive to foreign investors, especially compared to the returns of other countries that they have, such as Germany and Japan, that are now expected to experience higher growth. And that's the thing, too. Even if President Trump's policies, like, of course, on the surface level, buying less foreign goods, purchasing more domestic products, of course, that's better for GDP. But the problem is the United States is not making many of its products here anymore. We're always buying products outside of the country. There was a viral TikTok that I saw recently where someone was going into some MAGA store, a Made in America store that was a big Trump fan store, and he tried to find products that were made in America. All of them were made in China, Nicaragua, etc. All these other countries, not even made in America. And it just goes to show that even the most loyal Trump supporters, or like these stores that you see, they're going to do what's economically best, and it's cheapest to buy foreign goods, sell them at a higher price in the United States. And that's why this tariff policy hasn't worked and won't work. One obvious effect of a weakening US dollar is that it becomes more expensive for Americans to go to popular destinations abroad. Since the green since the dollar will be worth less compared to other local currencies. That's a really good point there, especially with it being summertime right now. That's going to be a really, really big thing to look into. So those are all of the topics I have to cover, and that's good.